From the world of politics.
Former President Trump is exactly that, a former president. He's a citizen. He has to turn all of that over to the American people.
To the world of business.
I'm a little concerned about some premature spiking of the football here. It's hard to look at that report and say, gee, we've made great progress.
This is Balance of Power with David Westin.
From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, it may be August, maybe Friday, but Congress is still at work with an expectation that, in fact, the House will vote affirmatively on the so-called Inflation Reduction Act. We go now to Capitol Hill. Our Washington correspondent, Joe Matthew, host of Sound On weekdays on Bloomberg Radio. So it's been a lot of expectation here over the last few days. Is there any doubt about the outcome, Joe?
Doesn't seem to be right now, David. Things have been fairly orderly. This is kind of a one-off. Lawmakers, to your point, aren't even supposed to be in town right now, and many will not be in town. Even Democrats could be voting by proxy this afternoon. More than 100 actually requested the ability to do that. But what we've seen happen so far is a procedural vote. They've outlined 3 hours of debate, and we do expect a final vote at some point this afternoon, say 4 o'clock. We'll see if they can get this done by the close of trading. That remains unclear right now, and it's very difficult to predict timing in the U.S. House. For a little context, though, on this, the reason why this is being framed as such a big win for Joe Biden, for Democrats, is because the long road that it has taken, David. If you go back over a year, and we've been talking about it together this whole time, the key word was infrastructure. Remember, there was hard infrastructure. That's the bill that passed. Roads, bridges, et cetera, also considered a big win. Then there was soft or human infrastructure, as the president called it then. That was what became Build Back Better, and that fell apart at the end of last year. That set the road for what we have here now, the Inflation Reduction Act, as it is called. We substituted the word infrastructure for inflation, which really speaks to the incredible change that we've seen in economic conditions since this whole debate began. Now, Speaker Pelosi cannot afford many defections here, but remember, they already passed Build Back Better in the House, and she only lost one Democrat vote when that happened. So we have a pretty good sense, David, of how this is going to end.
Yeah, and that name may have a little something to do with the midterm elections coming up, and I'm not sure, but it's just possible. Joe, thank you so much for being with us again. It's Joe Matthew, Washington correspondent and host of Sound On every day of the week at 5 p.m. Eastern Time on Bloomberg Radio. In the meantime, while the Congress is busy paying attention to the Inflation Reduction Act, members of the Federal Reserve are paying attention to the economic numbers that came out this week, including the CPI and PPI numbers, indicating that perhaps we're seeing a little bit of a tapering off of inflation. Earlier, late yesterday, actually, San Francisco Fed President Mary Daly directed the question of how the Fed should be reacting.
They're significant in that they are saying we're seeing some improvement, but they're not victory. We have an inflation report and an employment report coming out before the next meeting. It really behooves us to stay data dependent and not call it.
For his reaction to these numbers, we turn now to Glenn Hubbard. He's professor and former dean of the Columbia Business School. Dr. Hubbard served as chair of the Council of Economic Advisors under President George W. Bush. So welcome back, Glenn. It's great to have you with us. I want to also say you're the author of The Wall and the Bridge, Fear and Opportunity in Disruption's Wake, because I think that might have something to do with the Inflation Reduction Act. But first, talk about those economic numbers. Have we seen the peak of inflation, do you think?
We probably have seen the peak of inflation, but I think Mary Daly got it exactly right. This is hardly the time to call the war over. The hard part for the Fed is not the progress we're seeing thus far. It's when inflation gets down to, say, 4%, getting it all the way back down to 2%, which is where Chair Powell says he wants it. That's going to require a lot more demand action than the Fed's forecasts seem to imply, at least in my view. So the battle is way, way away from over.
Well, to that point, exactly, did the chance of a hard landing, so-called hard landing, did that go down with these numbers this week, do you think? Is there a greater chance of a so-called soft landing?
Well, I think a soft landing has been and is possible. I just don't think it's that likely, depending on what you mean by the word. I think for the Fed to get all the way down to its target, it is going to have to reduce aggregate demand. It's going to have to cool the job market as well. And so I think that much more action is going to be required. If you look at the Fed's internal forecasts and the information behind the dot plots, it seems to have the view that unemployment doesn't have to go up by very much, interest rates don't have to go up very much. That's just not how I see it.
Yeah, even with the softer numbers this week, we still have annual inflation of like 8.5% headline number. The question is, what does the Fed need to see before it starts to back off the rate hikes, do you think?
Well, I think there are two issues for the Fed. One is how much of the elevated inflation is truly supply related and supply chain related. No one, of course, exactly knows that. I think the Fed is more optimistic than I would be that that's most of inflation. And then the second is once you get down to the pure demand inflation, what is the Fed going to do about it? If you look at core inflation for CPI, it was still very stubbornly high. And core PCE, which is the number the Fed looks at, is very high and certainly elevated above 2%. So a lot of wood for the Fed to chop.
Glenn, I want to turn back to your book, The Wall and Bridge, because in that book you argue for what I took to be targeted investment for the purpose of long-term productivity and growth. Are we seeing that in either or both of the CHIPS and Science Act on the one hand and the Inflation Reduction Act on the other?
Well, I think yes and no. I mean, in both, you are seeing some intelligent investments. The U.S. does need to do more investing in the capability of producing chips and in basic research. Part of it raises questions, too, though, about possible corporate welfare. Is that something that might have happened anyway? The Inflation Reduction Act, crazily named in my view, doesn't have much to do with inflation, but the Inflation Reduction Act is pointing towards some green investments that may indeed raise productivity, but at the same time is raising business taxes. So it's really hard to know net-net.
Well, the raising business taxes is in part why they call it the Inflation Reduction Act, as I understand it. Is that likely to have an effect on inflation?
Well, the modelers who have looked at it suggest to a first approximation, the effect of the act on inflation is zero. And to be fair to the bill and the act, it's small relative to the size of the U.S. economy. So I think you should think of it as being not much to do about inflation.
Glenn, I'm also curious about the CHIPS and Science Act because it is, I think, at least a form of industrial planning that we've not had a lot of experience with, not successfully in this country. Japan's done it. Europe seems to be doing it now as well. What are the risks in that? Are the government actually writing checks to people to actually back one sector of the economy?
Well, there's risks in a way, I think, to get around it. The risks are clearly that you pick a wrong technology and or that you encourage corporate welfare or rent seeking. Strikes me the way to get around it is to make sure we have a preeminent role in basic research and that we put applied research centers around the country and let business focus on the development part. You know, in R&D, the federal support for R is important. Business can handle a lot of the D.
Glenn, I go back to your book again, because I remember you talking about the land grant colleges under Abraham Lincoln, actually, and what an effect, a good effect they had on the economy. What do you make of the fact that it's not just $52 billion, but they're, as I understand it, very specifically saying it's got to be distributed, as you say, around the country, geographically and also addressing some underserved populations?
Well, I think that could be important, but the devil will be in the details. For example, I think there's a good case to be made for applied research centers around the country partnering with local universities around the country to help get new technologies out there, much as the land grant colleges did with agricultural extension and manufacturing extension services. However, if it's just government located facilities with no link directly to universities and the private sector, I'm not sure it would be as successful.
One last one, if I could, Glenn, and that is, if you recall, the origins of this, what came out to be the CHIPS and Science Act, were actually competition with China in the technology area. What will this do, if anything, to our ability to compete with China in technology?
Well, I think it will help at the margin, but I think large American businesses have already focused on the need for that change anyway. To me, the best way the federal government can help here is more funds for basic research. And the Act does some of that.
Okay, thank you so much, Glenn. It's always a treat to have you with us.
Pleasure.
That's Glenn Hubbard. He's professor and former dean at the Columbia Business School. Coming up, it looks like that FBI search of President Trump's residence may have been based on national security concerns. We talk with Jane Harman of the Wilson Center about what's potentially at stake. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We want to keep you up to date on news from all around the world. For that, we turn to Ritika Gupta here with the first word.
Thanks, David. In Western New York, author Salman Rushdie was about to give a lecture when he was attacked this morning. The author's writing, many Muslims consider to be blasphemous, led to death threats in the 1980s from Iran. Witnesses say a man stormed the stage at the Chautauqua Institution and attacked him as he was being introduced. Rushdie's book, The Satanic Verses, is banned in Iran. The country has offered a $3 million reward for anyone who kills him. Meanwhile, President Vladimir Putin's invasion of Ukraine set Russia's economy back 4 years in the first full quarter after the attack. The invasion putting Russia on track for one of the longest downturns on record. Bloomberg data shows Russia's economy was picking up speed at the start of 2022, but it swung into a contraction during the second quarter. Gross domestic product shrank for the first time in over a year. Amazon, Oracle, and other data providers pressed by a group of lawmakers about how they sell mobile phone location data. The companies offered assurances that the information couldn't be used to track women seeking abortion services. The Supreme Court's decision to overturn women's federal rights to abortion has sparked concerns that location data can be used by law enforcement in states that have outlawed or restricted abortion to prosecute people who seek reproductive care. And in New York City, health officials say the virus causing polio has been detected in the city's sewage system. This comes a little over a week after it was found in samples from the neighboring suburbs of Orange and Rockland counties. Officials say the detection of the virus, known to cause permanent paralysis in limbs and possibly even death, suggests there has been community spread. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. David.
Thank you so much, Ritika. We first heard about it from former President Trump himself, that in fact FBI agents were executing a search warrant for his residence down at Mar-a-Lago in Florida. And then yesterday we heard from the Attorney General, who confirmed that in fact was happening and was asking to reveal what was in the search warrant. And we may well learn this afternoon later exactly what they were looking for. We turn now to somebody who really knows national security terribly well, particularly at high levels of the executive branch. She's Jane Harman, President Emerita of the Wilson Center and author of Insanity Defense: Why Our Failure to Confront Hard National Security Problems Makes Us Less Safe. Jane, thank you so much for being back with us. Give us your perspective. As I say, you really are an authority on national security. We don't know exactly what they're going for. There are reports that might have even had to do with things having to do with nuclear weapons.
Right. I would take this seriously, but let me put it in context. First of all those folks who are issuing calls to arms and the rest of it aren't issuing calls to arms about the fact that several senior national security officials in the Trump administration, including John Bolton and Mike Pompeo and others, have been targeted by Iranian National Guards folks, and one of whom offered a $300,000 payment to an FBI informant. They're not complaining about that. This is the same old FBI and Department of Justice, and it's protecting, thanks to the Biden administration and thanks to what it should be doing, a lot of former Trump senior officials. Just saying. So about this, let's remind that the Justice Department is an independent branch of government. Merrick Garland is not coordinating with the White House, which is properly not making statements about this. And he's not coordinating with Nancy Pelosi, who said she was given no heads up, or anyone else on the Hill. What he's doing is what he's supposed to be doing, is carefully following the law. And in this case, best I can tell, certainly based on the statement that he made yesterday, he has followed the letter of the law. There's a long chain here. And this this visit to the Trump facility, I wouldn't call it a raid, came only after they refused to comply with a subpoena. And all the material is properly put together. And if a judge approves Garland's request to release it, and Trump is not contesting that, we will know a lot more in a few hours. I don't know what's in there. We'll know, I think, what statutes are are in play, and we'll certainly know what stuff, at least the bare outlines, they took out of Mar-a-Lago.
Jane, you have years of experience in Washington, not just at the Wilson Center, but also representing your home state of California in the Congress, and you were the ranking member of the Intelligence Committee, as I recall, in the House. To the best of your knowledge, have we ever had anything approaching this with a former president and national security documents?
Not that I'm aware of, and it is it is serious on both sides. I mean, the idea of a legal proceeding like this against a former president has to be taken extremely seriously. And it seems to me that is exactly what the Justice Department, acting independently of the executive branch and the legislative branch, is doing. We don't know what will happen, but when I was in Congress and senior Democrat on House Intel, I was in the so-called Gang of Eight. That's the leader and my majority and minority leader of both intelligence committees and the leaders of the House and the Senate. And we were briefed on these so-called special access programs. Allegedly, reportedly, maybe material related to them is in some of these boxes. But this is highly secret. I talked to absolutely no one. I took no notes. If I had taken them, I couldn't take them out of the room. And this went on for years. And I know the president is probably a little more senior than the ranking Democrat on the House Intelligence Committee. But if he was briefed on this material and if he had papers on this material, I think it would be shocking, frankly, shocking, if he removed them from the White House and was out of compliance with this Document Protection Act that is one of the things that I think applies here. And maybe he didn't. We don't know this yet. Yeah. But if he had documents about our nuclear program, I don't know what they might be. If possibly he did share or was intending to share those contents with a foreign government, that would be, let's compound a violation of any Record Protection Act. I don't want to suggest what it might be. Right. We'll learn a lot more at 3 o'clock.
Yeah, and Jane, I certainly agree, wholeheartedly appreciate you saying there's a lot we don't know. We have to be careful about speculating about it. There are limited things that we do understand and know, including from the Attorney General. At the same time, based on what's going on, almost without regard to how it plays out, what does this say to some foreign powers that don't necessarily have our best interests? You mentioned Iran, for example. Clearly, they're not particularly fans of ours, of the United States. We have real issues. Russia, right now, with Israel and Ukraine, and even President Xi. What is this saying to our foreign, if I can call them as adversaries, about the way we're handling our national security?
Well, I think they're all watching carefully. They see our toxic partisanship as a sign of weakness. Guess what? It's a sign of weakness. The U.S. government is not functioning in the fashion it needs to represent the U.S. Interests and to confront the challenges that face us. We don't have an adequate strategy against those challenges. And with Congress so broken and the public discourse almost impossible, except on your show, David, it seems to me that they see us as weak and worry. A lot of them worry. A lot of them maybe clap their hands, or some of them do. But the stakes could not be higher. And on Iran, I just heard this news about Salman Rushdie, yes, who's an enemy of Iran. I just wonder if he might be part of just suggesting, no information, some kind of an Iranian hit here, possibly. Wow. Trying to get some of our national security officials. That would be just terrible. And especially now that we're at least the EU is trying to resurrect the nuclear deal with Iran.
Yeah, there's a lot we don't know about that attack on Salman Rushdie up at Chautauqua in northwest New York. We'll find out with time, and we'll report that right here as soon as it happens. Jane, thank you so much. It's really great to have you with us. That's Jane Harman. She is Chairman Emerita of the Wilson Center. Still to come, we're going to talk with former Australian Prime Minister Kevin Rudd about strained U.S. relations with China in the wake of Speaker Pelosi's Taiwan visit. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We had CPI, we had PPI today. It was University of Michigan consumer sentiment. And so the question is, how are the markets interpreting all of this? For the answer to that, we turn to Abigail Doolittle. So Abigail, where are we? It looks like a lot of green on the equities.
A lot of green on the screen for stocks. And it's interesting, we just can't get away from inflation because, of course, this week it has been all about CPI and PPI coming in cooler than expected. And we also had, I think it was from the New York Fed earlier this week, talking about Fed inflation or consumer inflation expectations coming in. in. But one piece of that UMich survey was actually the fact that while the actual survey was better than expected, that's a positive for the economy. Inflation expectations came in just slightly hotter than expected.
That 5 to 10.
That 5 to 10 year. Yeah, the short term. Yes.
Did the markets react to that at all, do you think?
Not really.
Yeah,
it was kind of, the big headline was the markets didn't even react too much to the PPI yesterday. It was really that headline CPI on Wednesday. That was the big one that everybody was watching for. And that, of course, has helped tech rally in a big way. We're looking at the fourth up week in a row for stocks because inflation is maybe coming in. A point I'd like to make, though, David, it's so interesting. So at the end of March, or the number for March, inflation, CPI, 8.5%. Inflation in July, 8.5%. In March, it caused stocks to sell off in a big way. A couple months later, investors have gotten their head wrapped around it, and it causes a rally on the assumption that it's going to continue going back down. But from an absolute perspective, I think that at some point later this year, investors, traders are going to be really reconciling the fact that we're still in a tough environment.
Yeah, it's a really good point to remember. In fact, there was a briefing with the White House yesterday where they got a little trouble by saying there's zero inflation. I said, no, it's just zero month over month. It's still 8.5%.
Very, very strong.
Exactly right. So tech is driving right now?
Tech is the strongest. Those 4 up weeks, very strong. Apple, a big deal. And of course, we reported yesterday that Apple's they have good news, in fact, of ordering parts for 90 million units, iPhone units, the same as last year. So demand is strong there. That's a positive. That tells you that consumers are still willing to spend on the luxury iPhone. In fact, I have to upgrade myself, so it might be a part of those numbers.
Yeah, but you made the critical point. Consumers on the luxury. There might be a bifurcation coming in.
Yeah, you're right about that.
And can't afford it.
That absolutely could be. And another point that's really interesting, this quarter that was just reported, it came in a little better than expected. But a part of it is you don't have companies yet really unleashing the costs along. What if that happens in the September quarter to be reported, that it really starts squeezing margins, or they do pass along the costs? I don't know. Lots of challenges.
Let me squeeze one more in here, because you got the announcement actually of some delistings from some big Chinese companies because of that audit problem.
Yes, that's a big deal. So PetroChina, China Petrochemical Company, and a couple others. That's weighing on Alibaba, JD.com, Baidu, and others. The thing that's so important about that China Tech Index from the February 21st, 2021 highs down about 60%. In a lag catch-up effect, the S&P 500 seemed to follow. So if this weakness, first of all, if it signals some kind of tension between China and the U.S. or increasing tension, that could be a problem. Yeah. But if the weakness continues for China stocks, it could bleed into the U.S.
It's an ongoing problem. Thank you so much for that report on the markets from Abigail Doolittle. Coming up, we're going to talk to the former Prime Minister of Australia. He's Kevin Rudd, about some of the tensions between the United States and China. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We're going to start right now with some breaking news on the terminal reported by our tech reporter, Mark Gurman. Apparently, Peloton is increasing the price of some of its products. They're also going to cut something like 800 jobs, and they're going to outsource some things. We welcome now Mark Gurman, our tech reporter, to take us through it. Mark, thank you so much for this reporting. What is Peloton doing and why?
For having me. So Peloton is undergoing a sweeping overhaul today that's going to take several months. So the big thing first, they're doing another round of layoffs. That's going to include about 784 employees, unfortunately, terminated. They also said they're going to begin winding down their retail business. That means they're going to start shutting a significant amount of stores across 2023, but that won't begin until the calendar turns, of course. The other thing they're doing is they're winding down their in-house delivery and customer service operations. So customer service is going to be chopped in half, and they are going to...
Sorry, Mark, it's breaking up there just a little bit. Can you still hear me?
Yes, I can hear you.
Great. So give us a little bit of the history here. I think Peloton had a rather good time during the pandemic when we were all shut in. What's happened since then?
Yeah, Peloton pandemic, because people were looking for ways to stay fit and work out and exercise from home. But that really led Peloton to overestimate demand. They felt for some reason that this demand for their products would continue long term, but obviously it didn't as vaccines became available, as economies reopened. So in turn, they built too many products, right? That led them to need to wind down their supply chain and caused many issues. And now they've laid off over 4,000 employees over the last year because of it. So a lot of fixing needs to be done to the company. new CEO Barry McCarthy is taking these extreme steps.
So it's interesting to me that you raise prices into that. Does that indicate that Peloton's looked at it and decided that, in fact, there is a sufficient demand, they have some pricing power, and particularly maybe because people who can afford Pelotons are not that push that hard on the finances?
Yeah, Peloton, seems to believe that even though unit sales probably go down because of the price increases, that revenue overall will go up because of the price increases. And as we saw, losses were wider than expected, and revenue fell 24% year over year. Actually, it fell for the first time since they went public during the previous quarter. So they needed a new way to juice revenues, and these price increases is one lever to pull in order to do that.
Okay, Mark, thank you so much for that reporting. That's Bloomberg's Mark Gorman, sorry. And apparently the markets are liking what they're seeing because I'm looking at my Bloomberg right now. Peloton stock is up over 6%, apparently, on this news. We're going to make a big turn now to China and U.S. relations with China. What is going on there? We had news today, as you know, of some delisting of some major Chinese corporations, apparently because of that dispute over audit papers that's been going on for some time with the SEC. Welcome now, Kevin Rudd. He's former Prime Minister of Australia, global president of the Asia Society, and author of the recent book, The Avoidable War, The Dangers of a Catastrophic Conflict Between the U.S. and Xi Jinping's China. So, Mr. Prime Minister, thank you so much for being with us. I will say, first of all, just a little plug here at the top. I've read this book. It is a great book. I recommend it to everybody who wants to try to understand the way you do exactly the inner workings of China, and particularly President Xi Jinping. So, first of all, take the question here of this delisting, because one of the questions it raises is President Xi willing to really forego U.S. capital markets?
Not at this stage, because they can't afford to. But their long-term strategy is one of self-sufficiency, not just in manufactures, not just in services, not just in technology, but also ultimately in capital markets, but not now. And there's a reason for that. China still needs net capital inflow, and that will be the case for some years to come. So I don't think they will welcome the decision that's been announced today.
In your book, you have 10 circles, concentric circles, looking into President Xi's mind. The first being staying in power, the second being really pulling the country together, the third being economic growth. Give us a sense of where they are in their plans, where President Xi is right now in his plans, because as I understand it from your book, he's changed his plans at least 3 times.
That's right. I try to use this notion of 10 concentric circles of interest to explain to an international audience what actually constitutes Xi Jinping's order of priorities, from political survival through to changing the rules of the international system and various points in between. And the third of those concentric circles of interest is continue to grow the economy. And you're absolutely right. What he's done is he's changed the Chinese economic model. The historical model we're all familiar with, really since the early 1980s through to about 2017, was one which gave maximum space to the Chinese private sector, maximum space to private innovation, and maximum space to capital returns. But since 2017, what we see is a pattern of moves of the center of economic gravity to the left. And the result of that, when you pile on also the COVID lockdowns and demographic factors in China, we're starting to see growth rates each year come down. This year, we're probably lucky again to see 2 to 3% growth in the Chinese economy. So the big question for those of us looking at this analytically, and I think for markets as well, is that once Xi Jinping gets through the 20th Party Congress this October, November, will there be a course correction on the economy or not? And that'll depend largely on who gets appointed as premier, as head of the economic team.
So, Mr. Prime Minister, that's the third circle. Let's go back to the second circle, which is actually national unity, making sure they have their entire country together. And that takes us, I believe, to Speaker Pelosi's visit to Taiwan. This is really an existential question, as I understand it, for President Xi. Give us a sense of what the effect is on U.S.-Chinese relations, and for that matter, internally in China, of the Speaker's visit to Taiwan.
Well, the question of reunification with Taiwan is one of what I describe as almost high theology, certainly high ideology of the Chinese Communist Party. It's about completing Mao's revolution in 1949, when, as you know, he secured control of the rest of the country minus the island province of Taiwan. And it's been that way ever since. So Xi Jinping's personal political dream is to complete Mao's mission. And he's, for the first time, compared with his predecessors, indicated a finite time within which that should be achieved. And the absolute finite time is 2049. That is the centenary of the founding of the People's Republic of China in 1949. So that's the kind of the background to it. How is the visit by Nancy Pelosi being greeted within China itself? The overall judgment within China is that this has created a fundamental shift in US policy on the one China policy, which was anchored in the original founding documents of the diplomatic relationship back in 1972, 79, and 82. And secondly, what they've seen with changes in President Biden's formulation on strategic ambiguity, that is, whether the United States would defend Taiwan militarily, to a more open commitment to that, is that they see that as changing as well. It partly explains, but does not justify, the nature of the hardline military response we saw from Beijing on the Pelosi visit.
Kevin, let me be very direct with you. In your book, in fact, I take the thrust of your book to be laying out a way that we can avoid armed conflict between the United States and China, something we all want. But one way to do that is to anticipate the possibility and be prepared for it, to avoid it, in fact. Are we a step closer to armed conflict than we were before?
The bottom line is, I believe, yes. And it makes the call in what I've written even more urgent than it was when I wrote it only 6 months ago. And secondly, if you start to put all these pieces together, which is actions in Taiwan itself, the politics of the People's Republic of China, and the hardening position of the United States Congress, put all these three factors together, what you do get is an increasing drift on this trajectory towards crisis, escalation, conflict, and war. At the same time, I do not believe that either side actually wants that, or certainly not now, and not triggered by accident. And the purpose of the book is to identify what I describe as a framework of managed strategic competition with some mutually agreed strategic guardrails to keep this relationship within manageable parameters, while it's highly competitive in all the other parameters, but non-lethal competition.
And finally, Kevin, of course, it's not just about U.S. and China. There are a lot of other countries, particularly in the South Pacific, including your own Australia, that are really implicated in this. Give us a sense of where that is at this point, particularly with the move for China toward the Solomon Islands. So they really made progress there. I think that you think that that was a big setback for us. What do you make of the policy of Australia and the United States and Japan, for that matter, in the region?
Well, Australia always takes its alliance obligations to the United States seriously, and it's done so for 100 years. We've been in the trenches with you guys for, I think, every major war in the last century, even some of the ones which were frankly dubious, like Vietnam and Iraq #2. But the bottom line is, in our part of the world, and I think in Japan as well, and certainly if you look at the new government in South Korea, there is a strong strategic perception that China is becoming more assertive, that it is seeking to change the situation on the ground, as we see unfolding in the South China Sea and partly the East China Sea, and with these new military activities around Taiwan itself. Secondly, we see evidence of that diplomatically through what's happening in the Pacific Island states and elsewhere in the world. And it's partly inevitable, therefore, that there is going to be a combined strategic response to this on the part of the United States and its allies. The key thing, however, is to navigate a way through this which maximizes deterrence against China over Taiwan, but still preserves a peaceful pathway for strategic competition.
Yeah, which takes us back to your managed strategic competition in your book. Thank you so much. Really appreciate you being with us, Kevin. That's Kevin Rudd, former Prime Minister of Australia and now Global President of the Asia Society. Coming up, former Treasury Secretary Larry Summers weighs in on what the Inflation Reduction Act does and does not accomplish. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. We talked with former Treasury Secretary Larry Summers for tonight's episode of Wall Street Week, and we discussed, among other things, his thoughts on the Inflation Reduction Act headed toward passage later today. There's a lot he's happy with, but that does not include what it doesn't do with taxing carried interest.
And the idea that the people who provide the service of asset management, who are often some of the best paid people in our country, should be able to have their compensation be taxed at half the rate of everybody else, I think is outrageous. And I think it's very, very sad that people on the progressive side allowed themselves to be persuaded by very substantial donors to their campaigns that the legislation as it was originally drafted should be gutted in that area. I also think it's very unfortunate, even more unfortunate because it's in some ways a larger issue, that the hugely historically important legislation or in agreement that Secretary Yellen reached with President Biden very much involved to foster international tax cooperation, that's probably going to collapse now, or may well collapse, because Congress wouldn't pass the enabling legislation by going after tax havens. And I sure wish that that had happened. I hope that some way will be found to go back to that set of issues. And frankly, David, it all has me thinking about the role of money and business interests in our system.
You can watch the entire interview with Larry Summers tonight on Wall Street Week, airing on Bloomberg TV and radio at 6 p.m. Eastern Time. Coming up, we're going to talk with Democratic Representative Jim Clyburn of South Carolina about the Inflation Reduction Act about to be enacted by Congress. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Westin. Earlier today, University of Chicago economics professor Austin Goolsbee, who also was the chair of the Council of Economic Advisors under President Obama, said that peak inflation could be in the rearview mirror. He spoke with Bloomberg's Alex Steele and Guy Johnson.
I think that it has peaked, holding other things constant. That is to say, we don't get another variant, the war in Ukraine doesn't deteriorate, we don't have some other major supply shock that happens, the Chinese don't shut down again for the zero COVID policy. But those are a lot of assumptions, and we have over the last 2 years consistently had assumptions like that disproven. But if we don't get that, it feels like the most important thing to come out of the inflation number this past month, and what we're all hoping to see continuation, is not the zero of headline inflation, because that's mostly driven by energy. It's that the core inflation was cut almost in half, down to 0.3% for that month. And if that continues, it's a sign that there was a heavy supply shock component, and that maybe we could put this behind us.
To that point, I've been trying to understand, even if we have peaked, let's just say, how quickly can inflation actually come down? Which is my way of asking how much help is going to still be needed to get inflation to come down quite quickly. There's a question in the market as to, are we pricing that in?
Yeah, indeed. That's a tremendously important question to ask. On a monthly basis, you saw it could drop pretty dramatically. We went from the previous month's core inflation was about a 7% plus annual rate, and it was cut in half in 1 month. Now, because of the way we add up the numbers, where we look backward for 12 months, it can only come down. The average inflation can only come down so fast. So it's going to be a delicate balancing act for the Fed. And you saw President Daly kind of describing that they've got to look and make these forecasts, even in the immediate term where it's the most uncertain. They've got to figure out, with the lags on monetary policy, we raised rates a lot. Is that enough? Can we sit and wait to see if that processes through, or do we need to be more aggressive?
Austin, how much of the tightening that has been delivered thus far, and policy does work with a lag, as you say, has been felt in the economy already?
Only a bit. Only, I think, the parts that have been felt are, of course, the most immediately affected interest rate sensitive parts of the economy. So you've seen construction, housing, an immediate seize up where mortgage rates rise quite significantly, and then the demand for housing cools down right away. But the secondary effects of those things we have yet to see, and that's why monetary policy works with a lag. So I do think we're going to need to be mindful. We had a burst of interest rate raising activity at a rate that was faster than almost any time in memory, and we have yet to see what the impact of that is going to be.
That was University of Chicago economics professor Austin Goolsbee speaking earlier today on Bloomberg and about the reaction to all those positive numbers about cooling, perhaps, of inflation. So let's take a look at what the markets are doing on this Friday at the end of a week that had a lot of eco data. Abigail Dula is back with us. So where are we overall in the markets?
Well, we still have this rally for stocks. You know, it's a 4-week rally, a bear market rally. I would continue to call that, even though you have the tech-heavy NASDAQ technically out of a bear market, but you have a big downtrend. But there's no doubt that folks, traders, investors are relieved over the earnings period that has basically been reported, earnings growth of 6%. And then inflation, that CPI number, as you know, on Wednesday coming in a little bit less. And that's a real point of relief. Today, we also have oil a little bit lower, so that helps.
Well, and the dollar's weakened a bit this week, has it not? In part, I suppose, because they think maybe the Fed won't have to raise quite as much.
You can make the case that the dollar is actually breaking down, and exactly for that reason, that the Fed won't have to be as aggressive. That 75 basis points for the September meeting is probably off the table, that it's more likely to be 50. I've heard a couple strategists propose the idea that it would be 25. But from a technical standpoint, the dollar is below its 50-day moving average. It's in an area of congestion that strongly suggests it's going to continue to come in. That may, in turn, tell us that this risk rally has legs because, of course, dollar-denominated risk assets, when the dollar goes down, it can help them go higher, as we've seen many, many times.
How many legs? The meme stocks did pretty well earlier in the week.
Yeah, they did. I mean, Bed Bath & Beyond, it's interesting to see some of these stocks, GameStop, AMC, and that's just a signal on momentum that investors want in. It's been such a brutal year that traders, whether they're retail or institutional, and I think that with the meme stocks, it tends to be more those Reddit traders, or at least that's the thinking around it. They're going to take it where they can get it. And if there's this period where the macro has let up enough so that these kinds of stocks can go higher. However, I don't want to say it's the dash for trash, but you hear about that sometimes. These aren't the high quality companies, but importantly, the high quality companies such as, and not to say that they're, actually, I don't want to put those companies down, but they're not the Apples and the Microsofts and the Alphabets of the world, where you have huge stockpiles of cash. And as we were talking about earlier, Apple, reaffirming that this year that their guidance for iPhones, it looks just as strong as the past year.
At the same time, we had some news break a little less than a half hour ago right here with Mark Gurman, our tech reporter, on a major overhaul of Peloton, which had been a very popular stock during the pandemic. Maybe not so much more recently, but they're laying off a bunch of people, like 800 people, closing stores, raising prices, outsourcing, and the stock is up a lot.
The stock is up a lot, and it is pretty interesting to see that reaction.
I've got it up a little over 9% right now.
Yeah, and I'm actually pulling up right now to see what the short interest is on this stock. And it's not that high, but it is higher. It's 13%. So it could be a little bit of a short squeeze of the bears, thinking that this pandemic darling, it's just going out. But it's clear that this company is making changes, that they want to stay around for longer. The thing that stands out to me perhaps the most here, the job cuts. I remember we were having a conversation offline a couple months ago, and you were talking about when you were president of ABC, that this would have been the time when you would have started to think about, if you had to trim 10%, how do you do it? We're seeing, it's not en masse, but we're seeing company after company cutting jobs. So at some point, what does that add up to? And I'm not trying to be a bad news bear, but just to kind of take that into account, that this is still an uncertain environment. We still don't know. Technically, you can make the case that it's a recession. We don't know what's happening later in the year. But Peloton making moves to really stick around.
Yeah, exactly. It's the time to actually be planning for the possibility of some cuts. Thank you so much to Abigail Dula for jumping in and once again reporting on the markets. Check out the Balance of Power newsletter on the terminal and also online. Coming up, Balance of Power continues on Bloomberg Radio. Join us there. And this is Bloomberg.